All right. Good evening, everyone. So, I have been involved in a lot of back and forth with people about whose economy was better, Obama and Biden or Trump and Pence. So, I figured I'm just going to sit down and look at the numbers and try to answer this from a mathematical perspective. So, the first thing is it's probably impossible to do that. So we'll just put that out there right now. But that being said, let's go ahead and dive in. Let's see what actually is there. So first question I had was, what are actually the metrics you'd want to look at? And we've got. I don't want to. I don't want to get Mr. Trump here. I'll move myself maybe right there. Actually, let's go over here. There we go. He's winking at us. So, what is the best way to measure the economy? I think there's probably four categories that I came up with. One is jobs, second's growth, the third is corporate economic health, so the large corporations of our economy, and then the next is consumer economic health. I gave them each a point, and then I thought of what are the kind of best metrics to measure each one of those. So, net job creation for jobs, that's each month, jobs are created, jobs are lost. And when you put those two together, you get the net jobs created. So, a lot of people talk about job creation. I think that's a good one. The unemployment rate, that seems like fitting for jobs. That's a percentage of people who aren't working. And there's a lot that goes into it, but I think that's a pretty common one. And then labor force participation, which is how many people are actually in the labor force. So you want that number to be higher. So that's jobs. I think that's a pretty good representation. And there's tons of metrics. So I tried to keep this to a handful for each one. But I think those are good, you know, pretty unbiased things. That's the goal with all of this. Let's really get to the bottom of it. Second category, growth of the economy. So we want the economy to grow. One of the ways that we measure that is GDP, but we need to measure it not just from a dollar perspective because inflation happens over time. So knowing that different presidencies happen over different time, you need to make sure you adjust for inflation, which is then you call it real GDP when it's adjusted for inflation. And then you can also say, well, there might be more people or not in the population. So for everyone in the population, we say, what's the inflation adjusted GDP over the amount of people in the economy, right? So I think that's a pretty fair way to measure growth. The second metric, what's the debt to fuel that growth? So our debt over the GDP, and that's a percentage, which kind of tells you how much we're spending relative to how much we're making as an economy. So those two seem like pretty good measures. Again, there's tons of metrics, but we'll stick to those two. The health of our businesses. So that's kind of the third. A lot of people talk about the S&P 500 as the stock market, but really that's only the 500 largest companies. And I think that's a little bit skewed sometimes because index funds make sure that anyone who's in that 500 largest companies, when people invest in index funds, which a lot of people do these days, those get artificially brought up. So the Wilshire 5,000, and it's actually more like 3,000 these days, but they still call it 5,000 because there were 5,000 companies at one point. But this is all the publicly listed companies in our economy. So take every company that's listed on an exchange. What are they worth? How did all those markets move? So I think that's the most fair representation to kind of take out that noise of the really large companies who get all the benefits of the index funds. And then real gross domestic investment from corporations. So our company's investing effectively. And what is that investment adjusted for inflation? Again, that real number comes in. So those are the two that I picked for economic health of our companies. What's the economic health of our consumers? So, there's a lot about medical health, et cetera. We're not talking about that here, although it's important. We're talking about the economy. So what's the economic health of consumers? I said, well, real wages. So again, adjusted for inflation, what are people making? We want that number to rise over time. So that's one. Household debt service to income. So what do people have to pay to service their debt divided by what they're making? So you want that number to be lower over time. And then the inverse of that, not really, but you would hope then people save whatever they can. What's the personal savings rate? You want that to go up over time effectively. So that's a little bit of the game board here. I think that's very much a non-biased set of metrics. I'm sure a lot of people will debate it, but that's what I picked. So let's keep going here. So what about time periods? We got Sleepy Joe, and we got I don't know what Don's DJT, maybe the Regeneron King. We got both of them here. What about time periods? So, knowing that Donald Trump is in really the tail end of his first term, and Obama had 8 years, we really need to think about how we compare those two. And the one kind of guiding principle here is I really didn't give anyone a mulligan. So I like, Trump kind of says, well, if it wasn't for the pandemic, yeah, I guess so. And you can look at that, but the pandemic actually did happen, and Obama had some bumps in the road, and he had a really bad recession to start with. So I'm just snapping the line, and you'll kind of see where it is. So if you're president at the time, that's your economy. That's kind of how I've done it. But how do we normalize for? Let me kind of move this around again here. There we go. How do we normalize for Obama's 8 years and Trump's 3 and change years? So I think there are 3 time periods that we can compare. And an acronym here that I've introduced, term to date. So you'll see kind of this first chevron up here that spans from January 1st. Let's see if I can get this out of here. I don't know what that is. Can I X out of that? Yep. January 1st of, I guess it's 2009. That's a little covered up down here, or Q1 of 2009 to September 30th or Q3 of 2012. There we go. Let's see. Can I exit? Whoa. You can tell I'm a rookie here. So that's Obama term to date, which matches Trump term to date, January 1st, 2017 to September 30th, 2020. So tried to look at the first 3 years and change through September 30th, which you could say, hey, Matt, it's early October right now. Yeah, but we don't have October data yet. So we tried to grab as much as we could to September 30th or Q3 if it's available in both of these time periods, right? So we're kind of comparing Obama term to date, Jan 1, 09 to September 30th, 2012, to Trump term to date, January 1st, 2017 through September 30th, 2020. Then I think we also need to measure what's the whole body of work from Obama's full term. So January 1st, 2009, all the way to the end of his term, December 31st, 2020. And you'll say, yeah, but isn't January 20th the time that the inauguration happens? Yeah. So how do you split January? I just snap the line at the end of the year. So, and this little space here is just for effect to show separation. It's not to scale. So we've got 3 time periods that we're looking at here, and we'll compare both, if that makes sense. So then what's the scoreboard, right? We've got how we measure. We've got the time periods. What's the scoreboard? I'll just make one note here. We've got all our guys. I actually put in Mike Pence here with his fly on his head. He just found that friend earlier this week, which was pretty cool. So one thing to note, we'll measure metrics. We talked about some of those metrics with how we measure the economy. We'll measure the percent change in those metrics. So for example, if we go from 1% to 2%, that's a 100% increase. It's not a 1% increase, if that makes sense. So that's how we'll measure things. And I think that's the appropriate way to do so. Okay, so let's move me around again. Here's the scoreboard. So we'll measure Obama's term to date versus Trump's term to date in scoreboard 1 across all the metrics we talked about. So jobs, we've got the three that we talked about here. We saw what they were worth on the other page, growth, etc. Scoreboard 2 is the full Obama term versus Trump term to date. Trump only has one measurement period, but this is how we measure both Obama time periods against Trump's body of work. Hopefully that makes sense. Okay, so let's keep going. And I'm going to rip off a little Michael Buffer here if I can. Let's see. Let's get ready to rumble! There's my sound effect for it. And we can see, I don't want to cover up our president down here with his wrestling debut. So, all right, let's take a look. What do we got? Sorry, I just keep moving myself around here. So we're on the jobs page. We've got our three metrics, net job creation. I've got a graph here. This is from all of these are from the Bureau of Labor Statistics. I'm going to link to all the statistics in a spreadsheet I put out there. So I'll talk you through it here. It was too much information to just put down in a slide. And this is what it is. You can see some charts. You can go to those websites to check it out. But net job creation, remember we talked about, hey, jobs added each month, jobs lost each month, you smush them together and you get what the net job creation was. So over those time periods, right, Obama term to date, he lost 321,000 jobs. Obama over his full term added 10.6 million jobs. Trump over his term to date lost 3.7 million jobs, right? So on both scoreboards, Obama ended up winning on net job creation. Unemployment rate, let's take a look at that. Obama term to date, really, really interesting. He went from 7.8% unemployment to 7.8% unemployment, 7.8% unemployment during that term. So he actually was even. Obama over his full term, he was a 40% improvement. So he went from 7.8% to 4.7%. And then Trump, so far, 4.7% to 7.9%. So Obama over his full term had a benefit or a favorable change in unemployment, 40% favorable change. Trump's is 68% negative or unfavorable. So Obama won both of those scoreboards in my little game here. Labor force participation. So this is one where you actually want that to go up. So all of our presidents have done a bad job here. We'll have some winners, but none of them have done well. And this is actually a structural problem in our economy right now. Labor force participation. Obama went down over his term to date, 3.2%. Over his full term, went down 4.5%. So going down is bad. Trump went down term to date a little bit less at 2.2%. So that beats both of Obama's numbers. So we've got angry Trump down there. So Obama took two categories on both of the scorecards, and Trump took one category on both of the scorecards. Hopefully you're seeing how this works now. Let's move to round two, growth. So growth of the economy, real GDP per capita. We talked about what that is. So Obama in his term to date, and by the way, we want that to go up. So real GDP per capita was at 49,491. This is inflation adjusted dollars. So that's how much economic output there is per productive person in the economy, $49,491. Obama's starting point, and his term to date went up to 51,578, so a 4.2% increase. Obama's full term, that $49,491 went to $55,165. So that was an 11.5% increase. Trump, term to date, started at $55,401 and went to $52,448. So he actually went backwards 5.3%. Obama took both of those categories on both of those scoreboards. Debt to GDP. So how much debt do we have to our gross domestic product. And this is something that you don't want to keep going up, right? So, and just as a side note, you could think about if you go to get a credit card or a loan, the bank's going to say, how much debt do you have to your income? Debt to income ratio is something that's pretty standard out there. They won't lend to you if you have something above 60 or 65%. Just keep that in mind when you think about where we are as an economy. So debt to GDP, Obama started at 77.2%. So no bank would lend to us, the United States of America. Keep that in mind. He ended at 98.8%. So spending like a drunken sailor. So went up 27.9%. That's bad. And this is another category where none of them are doing well. They're all going up. Debt to GDP, 27.9%. Obama term to date. Obama full went from 77.2% to 104.9%. So we actually spent more than we actually produced as a country at the end of Obama's term. So that was a 35.8% increase. Trump started at 103.1%, and he is at 135. Excuse me, I've got to redo this. Okay, there we go. Get my great editing through this. He's now at 135.6%. So just crazy spending. And the GDP has dropped as well. So that went up 31.5%. So Obama wins Scoreboard 1 when you look at term to date versus term to date. Trump wins when you look at Obama's full body of work versus Trump's term to date. So a little bit of a push on that one. Let's keep going. Corporate economic health. So the stock market, Wilshire 5,000, they actually both did really, really well. So the question is, how well did one do versus the other? Not, one did poorly. Actually look at these returns and they're phenomenal in both categories. Obama term to date. So the Wilshire started at 34.98, went to 60.31 at his term to date. So that's 72.4% increase. Obama full term went 34.98 to 102.4. So 192.8% increase for all of the listed companies in the U.S. Trump term to date. And by the way, this is phenomenal because the stock market took a major crash in March. So it's come back. I think Trump had something to do with it. I actually think the Federal Reserve had quite a bit to do, pumping money into hedge funds, the repo market, anyone they could, to be honest with you, buying bonds, junk bonds. That's a whole different story. Trump term to date. Wilshire went from 103.2 to 162.4. So that is a 57.3 increase. So you're looking at just phenomenal returns regardless. But Obama wins both of those. And I think this is one where a lot of people talk about Trump in the stock market. Obama had quite a run. So we've been in just an unprecedented time with the stock market since Obama's term through Trump's term. It's just been crazy. And then let's go to the second one for corporate economic health, real gross domestic investment. So what are companies investing? This is a sign of corporate health as well. Companies don't invest when they don't feel confident about things. And this is inflation adjusted. So we went Obama 1,986 to 2,648 in term to date, which is a 33.3% increase. Obama full term, 1,986 to 3,130, so 57.5% increase. Both of those are great numbers. Trump, not surprising where we are right now, and you can see this tail right here. He started at 3,120.3 and ended at 2,849.7, so a negative 8.6. Obama takes both of those. Let's keep going. And our fourth, round 4, consumer economic health. And just as a side note, our GDP, our economy is 70% based on consumer spending, which is kind of scary in itself. So pretty important here. You can see already Trump has a pretty good hold on this one. Real wages. So again, inflation adjusted wages, kind of deck to the CPI. So there's an index for this. 345 starting point for Obama, 333 ending value in term to date. So he went down 3.4%. Obama full term starts at 345, goes to 349. So a 1.1% increase. Pretty good, not great. Trump term to date, phenomenal. So real wages under Trump, and I think he touts this quite a bit. Trump goes from 352 to 392. So 11.3% increase. He takes both of those scoreboards. Household debt payment or debt service to income. So we talked about this metric. We want it to go down, which you can see this trend line here. It's actually, we've had a phenomenal run with this one. Deleveraging as a society or as a consumer base. So households' debt service went as a percentage of their income went from 12.7% Obama starting point to 10.13%, a drop of 2.6, or excuse me, a drop of 20.5%. Obama full term went from 12.7% to 9.9%, which is a drop of 2.8. So we kind of had a little bit of a relapse in there. Trump term to date went from 9.8% to 8.6%. So a drop of 11.7%. So this one's kind of a split category where Obama took scoreboard 1, Trump took scoreboard 2. And then the savings rate, personal savings rate in the US, how much money are people saving as a percent of their income? So Obama started at 6.2%, ended at 8.2% in term to date. And that's an increase of 32.2%, phenomenal. Obama full went from 6.2% to 6.4%. So that little bit of relapse in there too, still growing at 3.2%. Trump, and you can see this massive spike at the end here, went from 6.7% to 14.1%, which is a 110% increase. So Trump takes both of those scoreboards. And, I think it's just funny that a lot of the conservatives talk about socialism, but this is all just stimulus checks going out to people, by the way, just FYI. Okay, so drum roll, please. We've got a big fight on our hands here. Suspense. The winner is Obama on both of these. You can kind of look at where this. Oh, excuse me. You can kind of see where the scoreboard landed on each one. I'll wait for this to go away. All right, so scoreboard 1, Obama 2.66. versus Trump at 1.33. Scoreboard 2, Obama 2.49 to Trump at 1.49. So, I've been saying a lot. Obama's economy was better, at least as good, if not better than Trump's. And I think just the narratives out there around, Republicans or conservatives generally having a better economy, I just don't know that that's true, and wanted to pull some numbers forward for people. So, we'll give Obama a little bit of a victory lap here, and we've got Trump coming back from his rally disheveled and dejected. So thanks for listening. Hopefully this was helpful to you. And let me see if I can figure out how to do this here. All right. Hopefully this was helpful. I'm sure I'll get a lot of comments and can't wait to see how other people think about this differently. All right. Thanks.